Hi everyone, and welcome to today's video where we're going to cover a quick subject of retirement savings contributions credits and how it can positively impact any low to middle income individuals. So when we dive in today, I'm going to be mainly focusing on the married filing joint tax bracket because I have an example later in this video that's going to go through in a scenario of how you can maybe maximize this situation for yourself. So let's assume a married couple is making $30,000 per year. I know that's a very low dollar amount, but just for sake of simplicity, I want to make sure everybody understands tax brackets and how they are working marginally, meaning that if you are in the 22% tax bracket, that does not mean you pay 22% taxes on all the dollars you make throughout the year. You're only paying 22% taxes on the dollars that you're making above $89,450 for the year of 2023, for an example. So in a married filing jointly couple, they're making $30,000 this year. Well, they're going to owe on the first $22,000 they make, they're going to owe $2,200 on that dollar amount or on that income amount. The next $8,000 that they make, they're going to owe 12% taxes on. So that's $960 if my math serves me well. So that $960 plus this $2,200, that means they're going to owe $3,160 in total federal taxes for sake of this example today. So now that we understand that, I now want to jump over here to the credits and how the credit is going to be very significant for most individuals that are going to fall within these tax brackets. And why is because a credit is going to be much more powerful than a deduction. A deduction is how much your income is deducted down by, which after you have that deduction, then you're going to pay taxes on whatever that dollar amount is. A credit is actually credit towards less federal taxes paid. So in my example here, I'm going to go through the tax brackets first and the credit rates. So you're going to get to reduce 50% all the way up to $2,000 a maximum of the contribution. So $1,000 maximum per person on a married filing jointly coupled household if you're making less than $43,500 on your adjusted gross income. So that means that 401k contributions, IRA contributions, health savings accounts, and those other vehicles can actually lower your income to where you're going to get more of a tax credit for doing those positive things for your family and your future self. So let's assume the Jones family, I'll keep these brackets up over here on the left. Let's assume the Jones family is making $75,000 just as their adjusted gross income as of right now after their standard deductions and everything else that come into play. And they want to get a tax credit. Right now, they're at the $75,000 mark. They're not going to qualify for any credit rates or any credits available through the tax savers credit. Now, if they can lower their income down to $73,000 or lower, that's going to qualify them, which would then positively either provide them $200 all the way up to $400 in credit if they can figure out how to do it. So they do not like to have their savings account fall below the $10,000 mark. Today, they only have $12,000 in there. So what they could do, a strategy that they can do, is they could have the husband put $2,000 into the IRA, and that's going to lower their income down to $73,000. So they would qualify for this tax break, if you will, this tax credit. That would give them a $200 credit because the husband put in $2,000 into the IRA, which they can use 10% of that as the credit. So again, that's how we come up with $200 in credit that is available to him. Now, that puts them at $10,000, and that means that for their comfort level, we would not want to have them put any more money in any other retirement accounts because this family is not 59 and a half. We'll assume they're in their mid-40s for right now. But when speaking with their accountant, they're like, hey, how do we maximize this and how do we get this figured out to where we can take the whole credit without necessarily sticking our neck out and putting all of our savings on the line? So the wife could also put $2,000 into a Roth IRA. Now that Roth is not going to lower their income, but it does still qualify for the credit, the savers credit. So whether it is a traditional IRA or a Roth IRA or a traditional 401k or a regular 401k or a Roth 401k, all of those contributions give you these tax credits. So that would mean they put a total of $4,000 away into the retirement accounts. That means they could take a $400 tax credit. Now, the best thing about a Roth IRA, at least one of the best things in my opinion, is that Roth contributions can be withdrawn without any penalties, fees, taxes, whatever it may be, prior to 59 and a half, as long as it is the contributions. You want to leave any conversions in there for up to 5 years and any earnings in there until 59 and a half in order to withdraw those tax-free. So in this situation, they could take, let's assume that they're meeting with the advisor, their tax advisor in March of 2024, trying to finish up taxes for 2023. they could hypothetically put that $2,000 in on April 1st and declare it 2023 contributions towards their Roth limits. And then the next day, April 2nd, they can pull out that $2,000 and put it right back in the savings account for a rainy day fund, just like what they wanted to. But they netted themselves an extra $200 in tax credit, which means it's like they found an extra $1,666 deduction on their income. So I am not a tax advisor. I am a certified financial professional, and I speak with clients about tax ideas and how we can maybe manipulate the system or use the system positively for their situation. Please talk with your own tax professional to see if this is something that would be applicable to you. In the event that you derive value from this video, please consider sharing it with a friend or a family member. Also subscribing to the channel. We do post content at least once a week. I've mentioned a couple videos ago now that I'm going to probably increase my production because there are little fun facts like this that I like to share with the world, and I hope you derive value from it. So thank you for your time today. Hope you're well. Enjoy the rest of it. See you next time.